Hi everybody, it's McDonald speaking. Welcome to this week's US equity markets update. Looking at the Russell 2000 contract on the screen here, you can see that actually considering we've had such a volatile week in stocks, and some stock markets around the world have been going crazy, we've had very little movement here in the Russell. So this was the first candle of the week just gone, and this is the last candle. If you look at where we closed just last week and where we've closed this week, we're actually only down about 5 or 6 points from where we were. So it's been a very quiet week overall, and the Russell now really trying to make a decision as to where it goes next. What we've done is we broke out of this range I talked about last week, but all we really did as we came down here is we've just formed another bit of support, or reconfirmed some support down here where there has been some good support in the past. We've come down, we've bounced off that. So this becomes our next level around about 770, where I'm looking for price to break down through. I won't be surprised at all to see a bit of a rally in stocks this week. I just don't think that we'll make new highs. So now we're firmly into a downtrend. We've made lower highs, we've made lower lows, we're downtrending. I've been saying for a long time that we're well due a pullback, and now even though we may get a little bit of a rally early in the week, and it wouldn't surprise me as so many stocks have fallen so hard and to just due a little bit of profit taking, a little bit of buying to come back in, I'm expecting a lower high to come in somewhere before 820, and for price to continue back downward, break through these lows, and that's really where I'll be looking at it to break down with some force. If we just come and have a look at some of the other time frames here, the weekly does look a little bit bullish at that zone. You can see the support is forming there as well, and the candle is quite strong. I am not expecting, however, this to continue up, and the reason is that just based on this monthly chart, we've been talking about it for a long time, and now is the time for the sell-off to occur. We've finally started to turn bearish for the first time in a number of months, and if we can get a breakdown through here on the monthly candle, that's not going to be until next month. We've still got some time for that to happen, but it is going to be looking very bearish if that happens. And when I say very bearish, I mean for a decent sized pullback. I'm talking a pullback into at least the 750 region, which isn't too far from where we are now, but I'd rather see a pullback to around about 700. So I'm talking about a minimum 40-point pullback from where we are now, but more likely a 90-point pullback from where we are now to happen over the coming weeks. And from there, that is the point where I'll start to look bullish again, around about 750 to 700, and I'll assess the charts as we get down around those levels, but that's the point where I'll be considering starting to be buying the markets again. Let's have a look at some of the other markets and start with the Dow and look at the volatility we had here. Big sell-off on the Dow. You can see it was much bigger sell-off and then a decent pullback. Why has that happened? Simply because the Dow was more overbought. But what we have a look at now here is the Dow candle is looking very bearish. We can see it's still got plenty of room to pull back, and the Dow's region is around about 11,000 up to around about 11,300, but it's still got plenty of room, 500-600 points minimum to pull back. It's showing signs of it. It's not a bad thing that pullbacks occur. In a good strong uptrend like we've had, it's a very good thing that pullbacks occur. We need to pull back on this monthly chart. Once we do, stocks will be set up for a good long-term buy. Quickly looking at the the S&P, sorry. What you're going to see on the S&P is a very similar thing to the Dow. Had a good sell-off, good pullback, and weekly chart, again, we've got such clearly defined zones on all of them that look so similar. On the S&P, it's around about 1200 up to around about 1220, and we've still got a good 60 to 80 point move pullback due there on the S&P. And lastly, looking at the NASDAQ, and the NASDAQ's a really important one because it led the market higher. So if we just come back to when the market's recovered back here in 2008, in fact it's done it before as well, but if we come back to when the market's recovered here in 2008 and started this bull market that we've been in lately, it was the NASDAQ that turned first. So you can go and have a look at the charts if you want to prove that to yourself, but it was the NASDAQ that first changed trend back here and put in a higher low, broke up to higher highs. That occurred back in April 2009, and the market, the NASDAQ really led it higher. And a lot of the time here, the NASDAQ has been the strongest of all the markets, and also, by the way, the most closely correlated to the Russell, which is our main topic here. And this has been the most overbought, and it also looks the most bearish now. It's had the biggest sell-off so far this month, and it's probably got the furthest to go as well. So, and again, a very clearly defined region from around about 2000 up to around about 270. It just looks so strong. When I keep on saying these clearly defined regions, each of the major markets has got these previous highs with a nice line I've got drawn in, and just below that a big number. So it's so easy to say 2000 to 270, that's where I'm expecting price to pull back. It's also in that buy zone around the averages, so I'm expecting this decent pullback to occur. And while the NASDAQ led the market higher, the NASDAQ is now leading the market lower. I expect these markets to sell off, and just coming back here and looking at a big figure of 750, down to 700. In this zone is the zone on the Russell where I expect prices to pull back. Note that we're having a little run back up here on the daily chart already. I'm looking for a lower high to set in. I don't mind where it is. It might be the current high. It might be somewhere around about here. I don't mind if we rally this week. It won't change my mind. I'll be looking for a place to get into that downtrend, to join the downtrend where we make a lower high, and I'll be looking for price to make that move down. And my targets are pretty well defined on the way down. My first profit target will be 750, but I'll be looking to get more out of it on the way down if price continues. It will be a volatile week. There's a lot going on in the world. There's still a lot of uncertainty, and uncertainty around things like the nuclear situation in Japan weighs a lot of the markets. We've also got uncertainty on the whole conflict in Libya. So there's a lot going on. It is a time to be very, very cautious and to be focused on managing risk, probably more so than making money, but there's also money to be made, and if so long as you've got strong risk management practices in place, then there's the volatility that the market provides right now can provide good trading opportunities. Happy trading all, have a wonderful week, and I'll look forward to speaking to you on next week's update.